Welcome back to the channel, folks. This is Jason. Let's talk about the housing market. So, reading through the news today, I saw an article that got me thinking. I did a video way back in July or August. It was one of my first videos where I had more than 1,000 views on it. It was all about a 2021 housing market crash where the title was a little bit clickbaity. And what I did was talk about how I didn't think there was going to be a hard crash in the market. I thought there was going to be a general cooling off, period. So I still think that's the case, and the evidence actually kind of points me in that direction. So first of all, before we get started, you guys need to remember that all real estate is local real estate. It really is. Just because you're in a market that's gone up 100% doesn't mean that's really happening all over the country. Although right now, you can't ignore the fact that certain national trends are going to affect the market. Now, there are some stimulus related changes to the way mortgages are being handled. Now, certain borrowers who took out money on a home fell behind on mortgages, or if they were affected in any way financially by the coronavirus, they're going to be able to stretch out their loan to as much as a 40-year loan, or at least tack on some of those missing payments to the end of their loan without an issue. I'll do a separate video at some point covering all of that. I think there are already videos out there on that, but I was just reading through that. So that's one of the things that's actually going to push prices a little bit higher for right now. We have low interest rates on mortgages right now, but those are creeping up, and that's going to price some people out of the market. But let's talk about what's concerning about the market right now, why the market is probably going to cool down at some point, and probably pretty soon. We're going to see some seasonal flattening of prices right now, but also there's some disturbing things not really disturbing. I don't want to be a fearmonger here. Let's just talk about what's going on in the numbers right now, and we'll talk about what it means. All right, I'm going to bring up this article that I was reading earlier. And this is an unusually well-written article for CNBC. All right, here it goes. When is the housing market going to crash? And this is a red hot search item on Google right now, and let's talk about that. Google last week reported that the search, when is the housing market going to crash, had spiked by 2,450% in the past month. So there are a lot of people concerned about this. I think there are more people concerned about this in the fact that they want the housing market to crash so they're no longer priced out of the market. That's one of the things that's happening. So at the start of this month, 42% of homes were selling for more than their list price according to real estate brokerage Redfin. That's 16% or 16 percentage points higher than the same period last year. The reason this is happening, folks, and my good buddy over at Heritage Wealth Planning did a video on this as well, is that real estate inventory is only 46% of what it was last year. So it's only 46% of what it was last year. So there's almost no inventory out there. That's one of the reasons that all of these homes are selling for more than their list price. So this economist who they were interviewed is actually pretty worried about this. And they note that the housing market has been white hot for the past year thanks to stay-at-home work and the work from anywhere culture of the coronavirus pandemic. So look, the housing market is really just changing because while more and more people were starting to work from home for years and years and years now, this is becoming something that's permanent for a lot of folks. So there's no reason to live in high-cost San Francisco if you can telecommute from Nevada. And if you're not a San Francisco person and only work there because you were, a tech worker or something like that, then there's no reason to stay there. You can move to Nevada, pay no state income taxes, and still work from San Francisco. If that's how it works, if you don't have any ownership in the company and you're just an employee, you can certainly make it work that way. Anyway, if you have any questions about that, I did make a video on taxes for people who leave California, and it's not quite that simple, but yeah, I'll put a link to that in the description. One of the other searches that is extremely important here that I'm going to search is how much over the asking price should I offer on a home in 2021? That's a search that jumped 350% in the same week. These are pretty important measures of market sentiment here. And one of the things I notice is that prices are up nationwide about 10.4% year over year. And this is the largest jump since 2006. Now, some of you guys are thinking about a 2008-like decline in prices or a market crash. That's really unlikely to happen. The reason this is happening right now is that the market has an acute shortage of supply on the market for sale. And at the same time, you have record low mortgage rates that are driving the appetite to buy for millennials and Gen Xers. And these people were already behind in home ownership, and now they're sort of catching up. So there's about half as many homes actively listed for sale compared to this period a year ago, according to Realtor.com, according to that video my buddy made earlier. And this has caused competition to heat up to the point where buyers are likely to find themselves in a bidding war for almost every property. Like I've seen properties in places like Huntsville, Alabama, that are up 50% year over year. And these markets are not, I mean, these are good markets. I don't know that much about that market in particular, but these are decent markets, but it doesn't merit a 50% raise in the year. But like I said, all real estate is local real estate, but you can't ignore these national trends, okay? So the housing market is pretty competitive. It's more competitive. We've seen it in a couple of years. And you have to ask yourself if you're at a peak right now. So look, I think we're at a peak right now, but I don't think there's going to be a precipitous decline. There's been a decline in mortgage applications, right? And that decline in mortgage applications is probably related to people being priced out of the market, right? One of the other things that's not going to help is the ability to stretch out your loan to 40 years if you were affected by the coronavirus. Means that those properties probably are not coming on the market as foreclosures. Banks learned from the 2008 crisis when they had millions upon millions of foreclosures, and they were not set up to handle any of these foreclosures. They didn't have the processes in place to maintain these properties. They couldn't sell them fast enough. The market was flooded with foreclosures, and they ended up losing hundreds of billions of dollars on all these foreclosures. I know that people think that they made lots of money in that crisis on foreclosed homes, but the reality is that really didn't. And a lot of those homes fell into disrepair, and some of those neighborhoods stayed empty for years. They want to avoid that this time by simply renegotiating the loans and stretching out those mortgages for a longer and longer time period. That's actually good for the bank. It stretches out their period of profit on that loan to a much longer period over time. And some of these folks are not getting a necessarily better deal when they renegotiate on that interest loan as well, or on that interest rate as well, because they're stretching it out. So on the surface, it appears like, hey, my cash flow is improved. I've got a slightly better payment. But in reality, over the lifetime of that loan, they're going to be paying a lot more in the way of interest. And you're going to start seeing this reflected in financials for banks, third quarter, fourth quarter of this year, first quarter of next year. You're probably going to see improved financials because of this trend. There's no real hard numbers right now on how many people are going to be able to renegotiate their loans and stretch them out, but I imagine that number is going to be fairly large, because there are millions of people that fell behind on their mortgages for at least a few months and entered forbearance at some point, and now they're 3 or 4 months behind on their mortgage. Maybe they're paying now, but they don't have the ability to catch up. Let's face it, Americans aren't big on saving money. A lot of Americans, at least, aren't big on saving money, and they may not have the ability to catch up, and they're going to need those loans to be renegotiated. So I fully expect that to happen. But anyway, for a number of those reasons, I think that people are slowly going to start getting priced out of the market. We're going to see that sort of seasonal flattening, and we're going to see a little bit of a pullback. I see a more normalized sort of 3% gain for the rest of 2021 rather than the 10% gain that we saw nationwide last year, or in some markets. I know I saw a 20% gain in our market, my local market here, which seemed ridiculous to me. And I'm looking at places like Houston, though, which saw 7 or 8% rise. At least it was in the single digits. And markets are very different across the United States, but don't ignore these national trends. If you are waiting to buy a home, don't succumb to FOMO. Don't try to get into bidding wars when it comes to a home right now. It's not just lending and banking and all these factors that are playing into the inventory situation. We're also looking at home builders are starting to build more and more homes. They're actually building a lot of apartment homes right now too, because they realize a lot of people are going to get priced out of the market. So anyway, folks, those are just my thoughts on the real estate market today. I just wanted to share that quick video with you. That's all I have time for today. I've actually got real work to do today and tons of it. I'm going to update you guys on that too, because the bar that I've been working on for the last year or so and all the projects that I'm putting back together because of the pandemic, it looks like the business that have shut down for the last year or so is opening up in the next couple of weeks, and very excited about that. So I'll be sharing that news with you here in just a bit. So thank you very much, folks. I look forward to seeing you next time. Let me know what your thoughts are on the housing market below, and I look forward to seeing you when I make my next video. Bye.